Good evening, everybody. Hope everybody had a good holiday weekend. I was telling the chat room earlier today that Pittsburgh usually has weather that's distinctive. Either on Easter, it's nice and warm and sunny, or it's like a blizzard with terrible weather, winds that blow things sideways. So yesterday we had nice spring weather. It was a nice sunny day. This morning we woke up and there was 4 inches of snow on the ground. So it was a combination of both. Anyways, if you're not if you're not making any money should be on the bullish side of this market. That's because the market's told us it hasn't been a bullish market here for the last 2 or 3 weeks. 3 weeks anyways. So I saw somebody comment, yeah, that's what we had, kind of, Jay. It's 4 inches of snow, which is big for Pittsburgh. And it all melted away today. So anyways, I saw somebody say, oh, this is a bad market. It's a bad market if you're not on the right side of the market. And this is why the percentages or the probabilities are always where, using the candlestick charts, it makes it very comfortable that when you start seeing that the bears are starting to take control, start shifting your positioning a little bit, and you start adding short positions. So somewhere in here, obviously up here, you start seeing that the bulls had lost their force, especially with that gap down. Probably told you to close out a few longs and add a few shorts, and all in this process, it was probably a rollover where you were getting rid of the long positions that were still acting well from the recent momentum, to the point where over here you're probably at least 6 positions, 7 positions short, and only maybe 2, 3, 4 positions long. So as the market goes down, again, it goes back to the concept where years ago I would still be long, thinking, oh man, it's got to turn around, instead of, and I'm thinking, how much more can I stand this, versus this is great, all my short positions are working. So what can you do in a market like this? Well, at this point, probably nothing. You should be already established in a direction. So if you're long, you shouldn't be, obviously. If you were short, you're saying, all right, we're starting to sell off pretty hard. We're in the oversold area. So instead of trying to figure out what good short positions we want to be going into, the logic at this point is the short positions we've got are working, so let's just let them run. We don't have to do any trading as long as the positions we've got on are working the way they should be. And as you can see, the S&P 500 did not hold the 200 today. Now, close enough to say, all right, if they start popping it here and do a bullish Harami, yeah, the 200 is acting as support right about this level. But as of now, if we see further weakness as candlestick investors, we can pretty much see what type of pattern is setting up. Wave 1, wave 2, wave 3 of a bearish J-hook pattern. So the reason I'm pointing this out is, again, the comment I saw today was somebody saying, oh, this market's terrible. It's not terrible if you're already in the correct direction. This market is wonderful, and we'll get to some of those reasons why. Well, I'll just start off with some of the biggies. Like if you were playing Amazon, look what Amazon's done ever since the gap up in the overbought condition, a bearish left-right combo. They finally closed it below the T-line. So, I mean, it's just like, again, if you caught everything the way it should be based upon the signals and the patterns, or being below the T-line, this is a wonderful market to be in. You're just sitting with it. Is there an advantage to trading lower time frames in more volatile markets like this, hourly rather than daily, for quicker reaction? Evan, not really any advantage. It's just what you or what your nature is, or what's your trading strategy, what you want it to be. Yeah, so if you think the volatility is getting too big, yeah, trade off a 10-minute chart. It drives you crazier faster. So the important factor for trading anything is, what is the general direction? Now, even on Thursday, we had quite a few of these stocks bounce off of potential support levels. But the one significant factor that we saw occurring is that every major trader failed at the T-line. So that gave us this is NVIDIA, that gave us a little bit of skepticism to say, all right, if they didn't have enough strength to get up through the T-line, the one assumption that we always have to make is we're still below the T-line. Until we see a reversal signal and a close above the T-line, you have to assume that unless there's a drastic change of investor sentiment, meaning if there's something that shows you that they've changed direction, you have to assume that you're still heading in a downtrend until it's confirmed by closing above the T-line. Netflix. One day where they took it up above the T-line, brought it right back down. What was if you closed your short position here, why would you go short again? Because look where your stochastics were. They were still heading in a downward direction, not telling us that there was any big downside or any bearish sentiment going on. I don't know whether I said that right. I was kind of babbling. Now I forgot what I was saying. Oh, the fact that the stochastics were still heading down, not anywhere close to the oversold area, was still an indication that if they came back down through the T-line, you had to assume that we weren't in the oversold condition just yet. We wanted to stay short. What did I just type in? Labu, a good short ever since our left-right combo. And there's your kind of the opposite of your three white soldiers. And notice what happened ever since then. They couldn't get back up above the T-line. So what was the important factor to watch? Today, after having a hammer and a doji right here on the 200 in the oversold area, if they started taking this positive, that gave us a good indication the 200 was going to be acting as support. The fact that they opened it lower and continued lower gave us the opposite information immediately, that they weren't going to be acting as support. So, or the 200 was not acting as support. There are a few good charts, so no matter which way the market's going, we still have the opportunity or the ability to identify which stocks are still getting buying pressure. PETQ, still a classic pattern. Fry pan bottom, J hook in progress. WAIR we've held on to just because it's been kind of a steady eddy, staying above the T-line. PAGS sold off, but sold off very lethargically today, still in an uptrend. But most of our positions right now are short positions. Port, for example, when you saw the bullish engulfing, or sorry, the bearish engulfing, right at the 50. The nice thing about the graphics of candlesticks is when we're looking at a signal and we can see exactly where it's happening based upon something that everybody else is watching, like a resistance level, and stochastics are rolling over, the more pieces of evidence that we can put into our analysis, the higher the probabilities we're going to be in the correct trade at the correct time. ACRS, we closed out a good portion of this and reshorted it as it came back down the next day through the T-line. And what got this downtrend started? The bigger the signal, the more compelling there's been a change of investor sentiment. So you have a bearish left-right combo, a failure right at the 50, a close below the T-line. Just have to, have the confidence that the candlestick signals are telling you what's exactly happening in investor sentiment. Left-right combo, gap down, ICHR. How long do you stay short on this one? As long as you don't see a reversal signal. You see two red lines on I don't know why that is. What is this? Modify this. That's the simple 200-day moving. And what is this? Modify. This is a mistake. There we go. I was trying to put the 200-day moving average on and hit the wrong button right before we came on. So if you stick with the rule that as long as you're above the T-line, you're all right. But as soon as you see something close like HTRX below the T-line, it does two things. One, tells you they're below the T-line, and two, tells you the buying trajectory is gone. Close out the position. EXAS. Breakdown. And why is this a compelling breakdown? Hanging man, spinning top, doji. And this is all indecision up here in the overbought condition. Where was the first likely target? Back down testing this area. So now, if you're short, what do we need to be watching? Well, we're in the oversold area. We're right practically smack dab at where it hit bottom before. So that puts us a little bit more on alert. Say, all right, we're in the oversold area. We're right smack dab on an observable level that everybody else might start buying or supporting. Just be a little bit more conscious about putting a stop on this one. We recommended AMAG today because it had a nice bullish signal. But here's the perfect reason why a lot of people say, well, should we be buying here? I mean, this is the signal. You can. But I would rather, again, be a few cents higher, buying a few cents higher, confirming, versus seeing something like this. So if I bought yesterday or on Thursday, I'm sitting here trying to figure out what to do. Whereas today, my entry was, if it opened positive and started trading positive, let's jump in here, kept us out of a bad trade. Given the market tank, should we give the charts one more day, at least first 15 minutes of tomorrow, if they close slightly below the T-line? Yes. But again, now your analysis, John, is if we wake up tomorrow and we see that the pre-market futures are down another 100 points, and whatever you were watching that closed right there at the T-line is opening lower, what are the probabilities? Probabilities are saying, all right, let's close it out. What's the worst case scenario? They slam the market down in the morning and start bringing it back up and reversing it. We can always buy it back if it comes back up through the T-line. RYAM. There's our best friend signal. This closed right on the T-line. So this would be a perfect example to say, all right, what do we need to see to stay in this one tomorrow? We need to see it open positive and trade positive. Even though we've got a best friend signal, the markets are not helping us. If this opened lower, what's it telling us? It's telling us they're not supporting at the T-line. They're going to start trading below the halfway point of this candle. It's time to come out. Because if it starts trading down here, what's your overall chart telling you? Yeah, it looks pretty ugly. So right now, any long position needs to have good, let's say, need to have good compelling reasons to stay long. Because obviously, nobody's buying in this market. AN, another one, we're just staying short. Roku, same scenario. How long do we stay short on these? Do we see a reversal signal, a buy signal, and a close below the T-line? Now, do I need to have it close above the T-line? No, if this one sells off tomorrow like this, and then does a bullish harami way below the T-line, I'll probably cover the position. What is that one? How could I not read my own handwriting? Oh. COT. Just stays short. Cato. Cato is one where it came back and it's done the obvious that we know usually occurs in human nature, which is when they break through a resistance level, they're likely to come back and see if it's going to act as support. So if you haven't even bought this one, this still is a high probability buy if it opens positive, because it's telling you they're going to keep this up above the T-line. As they came back, used the 200 and the T-line as support, they're still in the uptrend coming out of this fry pan bottom. Okay, those are the ones that, see, we did Labu. Labu was one of the biggies. All right. A few of the long ones. Oops. Had this one looked better earlier today. So here's a perfect example of if you were buying this one early today and it closed back here and you didn't close it out, because the reason you were probably buying it was breaking out into new territory. If you didn't close it out, what was the last criteria that you needed to apply? And that was it needed to stay above the T-line. Which means, what does it have to do tomorrow to stay in it? This is just a very simple if-then type statement. which is if this opens lower, close it out. It has to open positive and trade positive to stay in it. So it kind of eliminates or removes decision making. You can make decisions based upon what is happening. Here's our doji. Looked like it used the, this is AAXN. Looked like Mike keeps breaking up. Looks like it used the T-line already as support. And what do we know about a fry pan bottom? Just a very simple rule. You can stay long as long as you don't see a sell signal and a close back below the T-line. You can also use this as a benefit if you can see the fry pan bottom setting up, that if it opens positive, what's the criteria? Number one, the doji rule, that it's going to move in the direction of how they open it after a doji. And two, if they open this positive, the likelihood of doing a doji sandwich tells us they're continuing this fry pan bottom. Yeah, I'd say, Tristan, you might have to log off and log right back on real quick to see if you can get a better connection. AOBC. This becomes a very easy decision. You can see the bullish Harami, the little inverted hammer. Now you've closed just above the 50, which is also right here at these levels. If it opens positive, pretty much telling you you're in the next wave and you're not going to be resisting at the 50, you got a high probability trade setup. So what's the only thing you need to watch out for? Is to see if sometime they pull it back and test the 50 before they take it back up. Whoops, I forgot these over here. CMTL. This is why you want to know the makeup of your signals and the patterns. Just look at your Morningstar signal. Look at your positive trading today. The market was down 500 points. You had positive trading based upon your signal and your pattern. You can be buying this one with a little bit more confidence because you can see the pattern set up, you can see the signal set up, you can see what your stochastics are doing. So if you're intent on buying something with the market at the well in the oversold area right now, you can buy things that still have the indication that they've been buying it even when the market was selling off very hard. I have another one, LPSN. Another one that's showing that they're keeping this up above the line, that you could be buying this one on strength. The gold stocks are acting well. This one is probably going to be recommended tomorrow. And why is that? Well, obviously, gold, so I can even bring gold up here. Let's see, gold. Picked up some steam today. Looks like it's Morningstar signal. Let's make this a little bit smaller and see if there's anything else. Just nothing but maybe a slow rounding bottom. So that means a lot of our gold stocks, like GG, that's a good looking chart. KL, that's got potential. GDX, if this opens positive, it's probably going to the next level, the 200. So what makes this so good looking? Look at all the evidence we can put into this. You got the big fry pan bottom. You've got the little pullback. Now you've got a doji gap up. They couldn't get below the T-line. They've gapped it up to the 50. If it opens positive, what's that telling us? The 50 is not acting as resistance. This fry pan bottom with a potential J-hook pattern tells us at least our upside is up toward the 200. So visually, we can see 3, 4, 5 things that tell us if this opens positive tomorrow, we definitely want to be a buyer. And that's all part of that, what I call convergence analysis, where we can visually see everything converging to right at the right spot to be a buyer. Here's SLS. This one had a big move today. Apparently they had some drug approved. Now, would I jump into this tomorrow? If it opened positive, it's telling me they're still buying, but more than likely I'd be trading off the 10-minute chart versus the daily chart. JSO, bullish engulfing, bullish confirmation. I didn't even check the other. Whoops. Nothing there on that one in First Solar. Nothing there. So JSO must have had something going on its own. And Sohu, bullish Arame, bullish confirmation with a close above the T line. Where do you think your next target is? Probably the 50-day moving average. All right, so should you be shorting this market? Well, we're not quite. We just climbed out of the oversold area. We don't know which way they're going to be taking this market tomorrow. Again, if they open this up much lower, we've got the prospect of a bearish J-hook pattern in progress. That means there are some stocks that you can continue to short. For example, SIG sold off today. Is it dramatically sold? Nay, it's just now broken through the kind of the support level. That might be wave 1, wave 2, wave 3. So we're trying to find something that's not already killed. Now, Tyson Foods, I understand they sold off today because of what do I want to say? Trade wars with China, where they are importing pork, and Tyson Foods is heavy on. Oh, JSO's earnings. All right, thank you, Mr. D. So this one, with the break of this level and the fact that they did a doji gap down through the 200, there's probably another wave to the downside on this one. This is wave 1. The next wave to the downside could take you down into this area. SUPN, morning or an evening star signal, has some potential of coming back. Twitter is right here on the 200. I'm sorry. Oh, this is completely different. Why is that different? Ah, that's why. Okay. I thought there was some. So right here is a filling the gap. So they're right here filling the gap. So now it's either going to support here, or if they break it down, more than likely your next target is down here at the 200-day moving average. And VSM. This is always important to see what has happened at, obviously, a support level. Well, the 200 doesn't appear to be acting as support. Big bearish engulfing. Still haven't been able to get back up above the T-line. Has a good prospect of even heading lower. Now, do we want to be shorting stuff when the market is down as far as it is? You can still go after positions, But what you have to do is, if this opens lower tomorrow and starts selling off, and the market starts selling off, you probably have to be a little bit more conscious of whether that's the final blow off and they start bringing it back up. So you want to probably be a little bit more aggressive as far as shorting it and getting ready to cover those shorts if it starts coming back up again. Another doji gap down. This is LKSD. If this opens lower, and you still got a lot more downside, or say some more downside. Another one that has the prospects of heading lower because of our bearish best friend signal. ALNY, this is more of an example of what you're looking for once they start breaking down. Remember what happens to investor sentiment. The more they keep selling it off, the more panic comes in. These are why we're looking for things that look like this, starting to sell off, so we can take advantage of investor sentiment that gets really scared as they keep selling things off further and further. So ANAB got that same setup. It's just now done a rollover with the idea that they could easily come down here to the 200-day moving average. Kind of broke down today just through the last support level. Overstock we recommended on weakness. Nothing yet to tell us there's any reason to be buying or covering short positions. ECYT, same scenario, probably has some more downside. Now, on something like this, where is the potential targets? Potential target could be the 34, it could be the 50, it could be the 200. Or what else would people be watching? You could put your Fibonacci retracement numbers on. Closed today exactly on the 38% retracement. If it opens lower, there's another target, there's another target. So it's not that we're using the Fibonacci retracement numbers as targets. We're using them to see if we see a buy signal right here, say they bring it down and do a hammer that bounces right off here and starts coming back up, we can see exactly why or where and why they were buying at specific levels. That's, again, the advantage we have with the graphics of candlesticks. This is snap. It still looks like it's got the potential of coming down here to fill the gap. So if it opens lower, if you're short, just watch to see what it does at this level. This one just rolling over. And notice what's happened here. Bearish engulfing, closed below the T-line. Now you've got a kind of a bearish doji sandwich that did not support at the 50. Any weakness on this one has the potential, again, the further they keep taking this down, the more panic will start coming in. Which is exactly what we're looking for. We're looking for that panic selling. IOVA, same scenario, except this line is not worth anything, but there's a gap down here. An ACAD. Little rollover. Another one where if these start showing weakness, that's where they can really start getting slammed pretty hard. So I wouldn't necessarily be aggressively shorting positions, but the ones that look good, you have to go after them on the basis that if the market keeps selling off, you can stay with them. But if all of a sudden you see the market starting to turn, you better watch your short positions a little bit closer. Okay, guess that's about all I got tonight. Do we have any general questions? The futures are showing a little bit green right now, but it isn't strong. I can tell you, yeah, Rick, right now the futures don't mean anything. Obviously, you've had a big down day. There's probably a little bit of a rebound. The important time to look at the futures is somewhere around 5 minutes before the market opens. So that tells you what everybody that's up and awake and getting ready for the next day is planning on doing. AMRS formed a piercing line on Thursday and Friday last week. Is this pattern reliable in a pennant like AMRS? Well, yeah, you got to remember, there was lots of bullish potential signals on Thursday. So that was a buying day. Look at what happened on Netflix. Bullish Harami right off the 50. What was happening in the Dow on Friday? It was trading up with about 200 and some odd points. So, but what happened is, or what you've got to anticipate is the confirmation. Everything's got to confirm. John, no, not necessarily. If a $60 stock goes to 50, that's the same percentage move as a $6 stock going to 5. Or, which is heavier, a pound of lead or a pound of feathers? It doesn't matter. Now, if I'm trading options, obviously I'm probably using the bigger price stocks. Not so much the bigger price stocks, but the more traded stocks, like an Amazon or an Apple. Yeah, and you also want to have liquidity. I know there's lots of stocks out there that have good charts, but as far as the liquidity, especially for options, they get a little bit testy. Okay, with that, Jim, let's go ahead and do the double line. And in 3.2 seconds, let's do the second double line. FNMA. Whoops. FNMA. Not found. Cisco. You can get ready to short this one. Good short. Restoration Hardware. More than likely, you're going to see it come back and test the 50. Again, kicker signal. I wouldn't want to see it close back below that candle, because that was the candle that told you that's where the bulls are taking control. But remember, right now you're fighting the market, so there's going to be a lot of times where signals, strong signals, still have to, after the trend has started, still account for what's happening now today versus a couple of days ago as far as investor sentiment. Chipotle, you can get ready to short this one. Again, the bearish engulfing signal right here at the 200 didn't support at the 50. There's a gap down here that they could bring it to. S-Fun, nice big belt hold. if you are long or planning to go long, I would use today's high as my buy stop. I'd want to see it get up through that level. But that would be a good trade. Remember, when you do those belt holds, they've wiped out a lot of sellers. IRET, an apiary fund a scam, funded trader. Ned, I don't know what that means. Is an apiary, is that where they have the birds? Oops. ARRY, if you're short, you stay short. Okay, you said that, Dennis. Sorry about that. Yes, stay short. Disney. Disney, not anything to get real excited about. If you're short, you can stay short, but Disney just doesn't have the volatility that you'd like. But right now, if you're anything, you'd be in the puts of Disney. XPO had the Morningstar signal. It needed to open positive and trade positive to confirm. Obviously, it didn't. I probably wouldn't be long or short this one right now. Mitch, stay short. Nugget, you can be buying this one on positive trading. Just watch to see what happens at the 50. AutoZone, another one where you can stay short, or you can go short. I probably wouldn't stay short. That wasn't much of anything to either be long or short. Papa John's, you can stay long. It's still not a very dynamic looking stock because you're sideways. If you're long, you just have to watch to see what happens here at the 50. ADAP, another one that if you're long, you stay long, but it needs to stay above the T line. Not much of a compelling chart anymore. And I say anymore, it had prospects over here. Then when they started selling it off, you can see what happens to the trajectory. It's just very slow sideways, which means it doesn't look like it's that dramatically good more. CPE, Barry Sharami, up here in the overbought area. Boy. To stay comfortably long, it has to open positive and trade positive. But that's toughy. If it opens lower, I'd probably close it out and just wait to see what happens at the T-line. An NTAP, stay short. 9 currently long. 9 currently long. I wouldn't be long. At best, you're hoping that it's going to turn around. We have no inclination it's going to turn around. Walmart wouldn't be long or short. There's just no direction on this one. And it's always a tough one to make any money with because of its big institutional trading. Lulu, you stay long. But if it opens lower, especially if it came down through today's low, more than likely it means they're bringing it back to test the T-line. I'd be out of it and wait for the next buy signal, even though you're coming off a kicker signal. AGC, this one I'd be a buyer of. The golds are acting well. We did Restoration Hardware. We did Apple. XLK. Stay short. We did Chipotle, Lulu, did Tesla. TDOC. You can get ready to short this one if it opens lower tomorrow. If it doesn't hold at the 50, it's going to the 200. I think we did SLS. Oh, you want to trade this off your 10-minute chart? We did Cisco. And no, not a bobble breakout. That's more of a morning star signal. Big candle, 2 indecisive days. Yeah, so yeah, not a bobble breakout. A bobble breakout is where they come up and hit a resistance level and pull back. This is just a nice looking chart to make sure your volume is good. FNMA. That's not, is that Fannie Mae? For some reason, Fannie Mae does not come up on this service, Charles. I don't know why. CELG wouldn't be long or short this one. Which direction is it going? Not anywhere. I'd be someplace else. Land's End. Whoops, that's not what I wanted. Yes. So the perfect spot, as you saw with the shooting star on Friday, was right here at the low or at the open. If it came down through there today, where were they taking it to? Back to the test the T-line. Is it still a good long? I'd probably wait now to see what it does here at the T-line. If it does a J-hook, then I'd be more apt to come into it. Rite Aid. That's a toughie too. That's it's got the kind of the little morning star signal. If you're long, it has to stay above the T-line at this point. I think, didn't we do ADAP? ADAP, nothing of any major consequence here. POS, one of the silver stocks. I wouldn't be afraid to be buying this one on positive trading, meaning up above the 200. RSX, yeah, had a nice best friend. So what did you need to see today to confirm? Wanted to see the bulls were still there. In this case, obviously, that didn't happen. SGH has to stay above the T-line. There's your classic setup. Fry pan bottom. If it starts trading positive, you can be buying this one. Did we do Lulu? Lulu. Yeah, I wouldn't want to see it trade back below the low. It needs to open positive and trade positive from here. I think we did PETQ. PETQ, you stay long. EETX. You can stay long on this one. It's not a real dynamic one. I wouldn't want to see it close back below the T-line / 50-day moving average. If I was a buyer, I'd put a buy stop up above the highs. Yeah, I think this, for some reason, Fannie Mae and Freddie Mac aren't on this service anymore. And I don't have the reason why. McDermott. Is that what you're looking for? That looks like McDermott. Just stay short. NVAX. Another one that's not real exciting. I'd probably be someplace else. Cassie. Well, for crying out loud, what am I doing here? Cassie. it has to open positive. If it opens lower, where are you? You're back into this little range again, which isn't telling you that you've got any good bullish sentiment. It has to open positive and trade positive. If it does open positive, put your stop at today's open, because if it comes down through there, the sellers are still in control. JNUG needs to get up through the 50. Unisys stays short. I don't know what the volume is anymore in Unisys. It used to be a big institutional trader. Square trying to stay up above the 50. If you were short, you would have covered your short on positive trading today because of the bullish Harami. You're getting into the oversold area. You still watch to see what they do here at the 50. Harmony, you can buy this one. Hopefully the volume is good on this one. I think it is. NKTR, bearish left-right combo. If you had been long and it closed here, why were you holding on to it? Because it was holding above the T-line. This is why when they start trading flat like this, I close them out until I see whether they're breaking this way, or this way. If you owned this one today, you should have closed it out on the close. CNC, little Morningstar signal. You can get ready to buy this one, especially if it comes back up through today's open. We've done this one, all right? If you like this one, you stay long. And NAC, the Chinese one, nothing here. I'd be someplace else. Okay, we've done all these. Didn't we do SLS? Trade that off your 10-minute chart. Papa John's, we did. Are we going through a repeat? What's happening here? Papa John's, you can buy. Just watch to see what happens at the 50. And we did JNUG. Needs to get up through the 50. Okay, so right now, instead of going after anything aggressively in this market, you want to see if, see if they're going to bring the NASDAQ back to this level, which coincide with the lows over here. I wouldn't be ready to cover any short positions until we see a very dramatic buying coming into the market. So some buy signals. Newmont, you can buy this one. That's a good strong chart. Okay. Oops, we got everybody done here before. Let's see. RDNT was backing and filling a little bit. This one, you have two alternatives. Because it didn't do a reversal signal and closed below the T-line, you can see how the T-line's been acting as a bullish factor all the way up. This is where you give it one more day. You don't have a reversal signal, but you do have a close below the T-line. So what you really want to do is see that it opens positive and trades positive. If it opens lower, you close it out, but you just get ready to buy it back if it comes back up through the T-line. I think we did CLG. CLG is a nothing chart. I wouldn't be long or short that chart. There's just no direction. Okay, with that, everybody have a good evening. We will see you bright and early in the chat rooms tomorrow. We'll see you then.